Good morning, everybody. It is Friday, just ahead of a long three-day weekend. My name is Pete Renzulli, Class B member, T3 Trading Group. A little bit of a spike here in the futures pre-market. A couple of numbers come out this morning, and Facebook actually getting hammered again this morning. One thing I want to point out, two things have to play into your trading this morning. Number one is, obviously, we've been talking all week. The volume is dwindling. We're getting a little bit of price movement this morning. So temper your expectations. And I want to throw that into something we normally don't talk about is the average true ranges of stocks and how much they normally move in conjunction with how much is available in a potential trade. As of now, which is roughly around 10 minutes to 9, heading into the market opening, the spiders have already gone the majority of what they normally do on a daily basis. So you have the average true range already reached or as close to it as possible and light volume pre-market. So temper, if you're long already heading into the day, great. You got some good spots from yesterday if you built a position heading into yesterday afternoon, or if you've been long for a while, as we've been saying. The downtrend hasn't cracked. This is a normal pullback that we had the last couple of days. I actually was hoping for a little bit of a lower opening to bid into this morning, just based on the fact that most of the analytical timeframes are all still pointing up. We got a weak close yesterday, one of my core strategies. Strong stock weak close, look for yesterday's low to be support to bid into. So I felt pretty strong that if we got a lower opening today, it would have been a good spot to bid and make some cash flow heading into the weekend. We ended up not getting the lower opening. As a matter of fact, we opened up and are opening up right now completely in the opposite direction. So I think getting long after a $1.25 move pre-market, the expectation for follow-through is diminished just a little bit. That being said, though, we do have some individual stocks. So if we go quickly to the SPX here, spiders actually, if we go to the chart, nothing really changed, but what I had mentioned yesterday in the pre-market was that we were looking for the 1410, 1400 level to hold in the SPX. You can see here on the spiders, essentially it was that 1422 level, which is support from the 21 EMA on the daily yesterday, as well as the support from about 3 or 4 days ago. We pretty much held it yesterday. I was looking for an opening right around that level to bid into that double bottom, essentially, as well as it being support from the moving averages. We didn't get it. We're actually opening up significantly higher off of yesterday lows, above yesterday. So you should be looking long today. It's just a question of we're going to open up higher, let it pull back a little bit. The better spot to be bidding is above yesterday's high, a pullback from today's pre-market, and also right around the 8 EMA on the daily, which is either way, there's going to be right around the 141 level. So we're opening up just above that. So make sure you temper. You don't want to get involved in the enthusiasm of the pre-market move to the upside. Get your price, which as we said yesterday morning, the better trades have been bidding the pullbacks as opposed to trading the breakouts. It's just the tape that we're in right now. So we can go to a couple of individual charts of some stocks that I had game planned for this morning. First one, we mentioned it yesterday, was Citigroup. Inside day in Citigroup yesterday. It's still holding pretty cleanly. So you got an inside day holding above the 200. Now, basically a 4 or 5 day consolidation. I'm looking for a breakout in Citigroup above 30, holding 30. 31.25 be the first target. Other stocks we have on the long side, a little bit off the beaten path from what we normally look at. GPS, gap, holding above that gap. From yesterday, above 36 and pausing. I like it. We mentioned UA yesterday, opening up above that $58 level or right there. We like that one. Amazon was an interesting one. We finally pushed through the multi-year high, but you can see we got a big doji there, or reversal candle, topping tail, whatever you want to call it, on decent volume. I do like the long in Amazon, but you have to respect the fact that we pushed through that level we've been waiting to get through for a while and did not stay there. So you really want to make sure that you're bidding into a good support, meaning you have your risk very well measured on the Amazon. It pushed through the level, but price action spoke yesterday and pulled it back. Now, did it pull back because the rest of the market pulled back? Possibly. But the bottom line is it didn't stay there. So bid a good level in Amazon where your risk is very well defined. If you chase that breakout up at that level, it couldn't hold again yesterday. The downside could be maybe a little more than your comfort zone normally would stand for. So I think bidding a pullback in Amazon above the level it couldn't hold yesterday, which is the same level everybody was watching, that multi-year high, it makes sense to get long, but make sure you got a spot you manage your risk. Another one, VLO. Again, not necessarily high beta, but look at that trend. It's been very, very clear for multi-months now, and if you look to the left, top left-hand corner on my monthly chart there, this 3050, 3075 level is a resistance that we just peeked our head through yesterday. 3 months to the upside, right at resistance and pausing. I like this stock long above this. As long as it holds above the 3050 level, you have some room to go there again to multi-year highs. Just want to point out quickly too, MasterCard and Visa, MA and V, both of them forming pennants on the daily chart. Now what that means is you get a little bit of consolidation over the last week or so. However, as we keep talking about, consolidations lead to an increase in volatility. You should have MA and V an alarm set around this point or consolidation of the pennant, because if and when they break out, you want to make sure that you're on for the ride. Don't guess direction. Let it tip its hand when it comes out of the pennant and then hop on board. Typically, you get one move out, one move down, and then it finally picks a direction, but you must have these game planned as decrease in volatility, looking for an expansion in volatility. Expansion in volatility means trend. So have MA and V, these big daily pennants, is something you should be watching. Just in case we roll over today, you also need to game plan some short sales. So we're going to cover, I think, 3 short sales, 1 that I took yesterday and 2 that I'd be looking at today if the market should roll over today. The first one is Caterpillar, breaking down pretty nicely here over the last 6 or 7 days. You can see now it's clearly below all of the key moving averages that we're looking at. If you look at the chart in the bottom left-hand corner, the weekly chart is confirming what we are seeing on the dailies, where we're starting to roll over. Lower lows, lower highs, and we're trading below the last previous 3 weeks. We also have Deere, nice little 2-candle bear flag. We got some support here in Deere, 73, 73.25. However, a higher opening here is going to take into key moving averages in a stock that's downtrending. So if you're looking at 73 being support, a higher opening in Deere, first topping tail, whatever it happens to be, if the market doesn't hold. Caterpillar already broke support. Deere is kind of in a trading range, but you got a little bit of a bear flag over the last 3 weeks here. Higher opening in DE should be a short sale. And last but not least, the one that I had mentioned yesterday was IBM. We finally broke through the 194 level. Probably going to open up a little bit higher today with the rest of the market, but you can clearly see there the 200 EMA on the daily, 191.34 is the target if we start to roll over again. So if we open higher, yesterday's low would be the first area of support you'd look for. 191.34 would be the next one. So you have roughly a $2 target if it can take out yesterday's low. So remember, 3-day weekend, ghost town here in New York. I would expect that the majority of the trading will be done in the first 90 minutes of the day today. Be smart. Don't be a warrior and say, I have to trade all day because I'm a trader. If volume dries up and you're starting to see wicks all over the place on your daily charts, on your candlesticks intraday, log off. You don't have to trade till 4 o'clock. As a trader, your job is to get paid for your skill. You're not looking to get paid by the hour. All right, so earn money in the morning if it's available. Put on your best trades, and then as volume dwindles later in the day, log off and start your 3-day weekend and have a nice weekend. Hope we get some good weather. Hope everybody has a safe weekend. We will see you next week.